Welcome back to RealPage Economy Express. Today, we'll be examining the latest economic indicators as we navigate through mid-2024. We begin with the Consumer Price Index, which saw a slight decline of just 0.1% on a seasonally adjusted basis in June. Over the last 12 months, the All Items Index has increased by 3% before seasonal adjustment. Notably, the index excluding food and energy recorded a modest increase of just 0.1%, the smallest increase in almost 3 years. Shifting to the Producer Price Index for final demand, there was a modest advancement of just 0.2% in June. On an unadjusted basis, this index has risen by 2.6% over the past 12 months. The increase in June was primarily driven by a 0.6% rise in prices for final demand services, which was partially offset by a 0.5% decrease in the index for final demand goods. In the housing sector, building permits for privately owned housing units rose by 3.4% in June, although they were 3.1% lower compared to the same month last year. Housing starts saw a 3% increase in June, but were still 4.4% below the level of the previous year. Notably, housing completions in June surged by 10.1% from May, marking a significant year-over-year increase of 15.5%. Turning our attention to the labor market, initial unemployment claims rose to 243,000 in the week ending July 13, marking an increase of 20,000 from the preceding week. The 4-week moving average also rose slightly to 234,750. The insured unemployment rate held steady at 1.2%, the highest level since November 2021. Additionally, the Conference Board Leading Economic Index for the U.S. decreased by 0.2% in June to 101.1, following a 0.4 decline in May. Now, this ongoing decline, with the index falling 1.9% in the first half of 2024, is largely due to weak new orders, a negative interest rate spread, and rising initial claims for unemployment. On a related note, Federal Reserve Chairman Jerome Powell has indicated that the Fed will not wait for inflation to reach 2% before cutting interest rates. Speaking at the Economic Club of Washington, D.C., Powell emphasized the central bank's need for greater confidence that inflation will stabilize at the 2% target, bolstered by recent favorable inflation data. In conclusion, while certain sectors of the U.S. economy are showing strength, the broader economic indicators call for careful monitoring. As we look toward the latter half of 2024, economic outcomes will heavily depend on shifts in consumer confidence, trends in the housing market, and the timing of interest rate adjustments by the Federal Reserve, which we believe will begin in November. Thank you for joining us today on RealPage Economy Express.